Taking over payments with foreclosures. In other words, can I take over a house payment from a home seller that's behind in their mortgage and their home is in foreclosure? And the answer to that is, before I explain it, I just want to put a disclosure out there. I'm not an attorney, I'm not a financial advisor, so I could be 100% wrong. But in my own previous history, I've been buying houses since the last crash, which was in 2006, 2007, 2008, 2009. And I turned these properties into rentals after I bought them with seller financing, aka taking over house payments. So let's get to the point. Let's get back to the story. Can I take over payments with foreclosure? And the answer, in my opinion, is yes. But it's very, very costly. Now, there's a difference between pre-foreclosure and foreclosure. A foreclosure is when a seller is normally behind, usually depends on the lender, but if we're talking about corporate banks, usually 3 months. So a seller hasn't made payments on their home 3 months, and now that house goes to foreclosure, and depending what state you're in, the trustee will start the foreclosure process. I'm in Texas, and this is the way it works. So the trustee will start the foreclosure process. They'll send a notification to the borrower/seller, letting them they have a certain amount of days to, cure the loan or pay it all off, or, basically they're going to get foreclosed on. Okay. Now that's a foreclosure. Now the question is, can I take over the payment with houses that are in foreclosure? And the answer, in my opinion, is yes, but it's going to cost a lot more. Here's a breakdown why it's going to cost a lot more. Number one, the seller may be behind 3 months. Okay. So you got to add all that stuff up. Two, now the trustee, which is the attorney, has got involved in it, and there's going to be a lump sum of money, maybe like 7,000, 6,000, maybe more, depends on the jurisdiction, that needs to be paid. Okay, and then three, there's all these junk fees that they add up. The bank adds up, the lawyer adds up, and so it becomes very, very expensive. But it's still possible. For example, if the seller hasn't made payments on their property, and now the house is in foreclosure, the trustee will send out a letter, and I want to take over the seller's payment. All I have to do is pay the arrears or cure the loan. Basically, pay the 3 months in the back, plus all the junk fees, plus the trustee's cost, what the attorney's cost, and that's the lump sum I have to pay. Usually it's going to be, depends on the property, depends on the monthly payments of the property, but on an entry-level home, starter home, roughly about like $7,000 to $10,000 plus or minus $5,000, because it's hard to say. Like if the payments are $1,300 a month and they're 3 months behind, well, you can see that's right there, $3,600 or $3,900, 369, yeah, $3,900, plus let's say the attorney adds another $7,000 onto that, and you add that up, and there's another junk fees for $1,000, so you get the picture. Okay. Now, personally, I like buying houses from motivated sellers in the pre-foreclosure. Yeah, let me say that, pre-foreclosure. Now, the difference between pre-foreclosure is that, let's say I find a motivated seller, they're behind on their monthly payments just 1 month. The house hasn't gone into foreclosure. This is what's called a pre-foreclosure. Because remember, there's a grace period that we talked about a little bit earlier, roughly about 3 months, that a lender will give a homeowner, depending on the lender and the mortgage. But the corporate bank lender is going to give about 3 months. Okay, so if the house owner is only behind on their mortgage payments for just 1 month, then this is a lot cheaper or more affordable deal for me, because when I buy the seller's home subject to their existing mortgage, in other words, if I buy their home by just taking over their mortgage payments, all I have to bring to the table is that last month that they're behind. So if their monthly payment is $1,300, I just got to pay the $1,300, maybe pay the closing costs, or maybe I'll negotiate and have the seller pay the closing costs, or whatever the situation is. I don't have to come out of pocket so much money versus foreclosure, because I don't have to pay that trustee $5,000-7,000. I don't have to pay all the junk fee at the lender's expense that they claim, and and the house is not behind 3 months. It's only 1 month behind. Okay. Now, another thing I like to buy is people that are not behind in payments, not even pre-foreclosure. Someone that's thinking, hey, I really don't want this house, or hey, I really can't afford this house. Hey, I got a divorce, I can't afford the monthly payments, but they're current. That's the G spot for me. I like to buy houses that they're current, the house is not behind in payments, the house doesn't need any repairs, and is ready to turn into a rental property or into an Airbnb or whatever my exit strategy may be. Okay. Now, why is that important? Is because, less money out of my pocket. Do I want to buy a house that's behind 3 months and, it needs repairs and the trustee wants $7,000 and the bank wants another $1,000 or $2,000 or a bunch of junk fees? When you add it up, I got to come up 10, 15,000. Or do I want to buy a house that the seller's not behind in their payments, but they just realize they can't afford it anymore? They're just willing for me just to take over their payments. And the seller may pay the closing or I may pay the closing, but either way, that expense is so much less than the other situation where, the house is already in foreclosure. Okay. Now, I love seller financing. I love owner financing. I love subject to real estate investing. I think it's the best way to create wealth for me, not financial advice for you. I don't want to tell you what to do or how to do it. I'm just giving you my opinions and what I do. Okay. I love finding motivated sellers because the key is motivated sellers. Not every seller is a motivated seller. Now, the average seller will not allow me to take over their house payments. Now, if they're in foreclosure, then they don't really have any choice. What I mean is they have choices, but if they don't, they're going to go off the cliff because there's a cliff coming and they're on this canoe and they're going to go right down it. So seller financing, the way I explain to the seller is, hey, this is not your best option, but this is your best worst option. Because seller financing is not their best option. Okay, their best option is for them to, sell it traditionally with a real estate agent, right, and have the new buyer cash out their loan. Their worst option is to let it go to foreclosure. They get a black eye or two black eyes, hurt their credit for 6-7 years. Everything around them is going to be more expensive from their cell phone bill because everything's credit based and so on. Okay. But this is what I call their best worst option because it's not their best option. It's not their worst option. It's somewhere in the middle because with seller financing, the seller will still be on the hook when it comes to their social security. When someone pulls up, the debt is still attached to them. But, the house is not going to foreclosure because I'm making the payments or I'm going to make the arrears, the payments that were behind, aka curing the loan. Okay, so in many times that I buy seller financing, the seller, if they're in foreclosure or pre foreclosure, then their credit is getting shot. And when I make up the back payments and I start making the monthly payments on their property, it actually boosts their credit. So again, it's not their best option, it's not their worst option. The way I define it to the seller is this is your best worst option. Okay, so if you have any questions about seller financing, if you have any questions about taking over payments with foreclosures, if you have any questions about taking payments with pre-foreclosures, with owner financing, with subject to real estate investing, just leave it below. I'll be happy to answer for you. Or go to my blog, my free blog. I have a bunch of videos there at myrealestatedojo.com. Again, at myrealestatedojo.com. And don't forget to download my free book on seller financing where I show you how to find these sellers, how to negotiate, how to identify motivated sellers versus from non-motivated sellers because, again, motivation is the key in this business. Okay, thank you for watching. If you could click the like button, love to hear your thoughts and comments below. Peace. Real quick, download my free book, Real Estate Investing for Beginners, the ultimate starter guide at myrealestatedojo.com, where I teach you how to find motivated sellers, buy their homes at a deep discount, and then have the seller become your own private bank. Subject to, get it now. One more thing, if you're looking for private one-on-one help when it comes to real estate investing, then consider joining my academy where you sit down with me one-on-one. 3, you get access to my best-selling courses. 4, you get access to my video library, and then the list goes on for just $97 a month. Join me now at mrnofluff.com. Lastly, the best 6-figure side hustle, bicycle flipping. Want to see how? Here's a behind-the-scene video how I did it. Go to thebestsidehustle.com mrnofluff.com. Now let's get back to the content.